The inland marine insurance segment has grown steadily in the past decade in tandem with increases in construction spending and the transport of goods. Here to discuss the sector is David Blades, Associate Director, AM Best Industry Research and Analytics. So David, the report calls the inland marine line one of the most profitable lines in the property casualty business. Why is that?
Well, Meg, we believe that the effective specialization of marine underwriters, and what I mean by that is those insurers for whom inland marine is a large part or a large proportion of their business, we believe their effective specialization over time has really driven the results and the long-term historical profitability of those results. And we think that's something that we can see continued on a going forward basis. But like I said, that's been in large part what's driven the historical profitability of inland marine in comparison to other property casualty lines of business. And I think diversification plays a huge part in that. First, from the diversification standpoint, there's a multitude of different risks that are involved with inland marine coverage, and when you look at that from an overall standpoint, also diversification from a geographic perspective in terms of the movable nature of property that's covered by inland marine risks, motor truck cargo, installation floaters, exhibition floaters. That diversification, I think, leads to maybe one or two classes within inland marine, maybe at a given time, having some profitability problems. But from an overall stability perspective, the line has again had the stability and generated the results that have definitely outperformed the overall marketplace. Now, you might see in years where the overall property casualty business, and especially property lines, are affected by natural catastrophes, that can have a slight uptick or create a slight uptick in terms of the loss ratio for the inland marine line. But in general, the inland marine line is definitely less susceptible to swings in profitability than other property lines like homeowners coverage or fire coverage or things of that nature. And I think it's admirable that in a market where capacity is very ample and competition is very strong, that these results have continued to be generated over a long period of time.
Have those attractive results drawn new entrants to the market?
Well, definitely. I think over the past decade, we've definitely seen the results of inland marine, from inland marine underwriters, and for that line of business, attracting new entrants into the business. So you have, again, insurers that hadn't been in the inland marine marketplace, and they've started to develop products and looked at that line of business. But I think also what we've seen is insurers that are in the marketplace looking to expand their portfolios, right? So they already have infrastructure in terms of having underwriters that write in the marine business, but they've looked to expand in terms of, as I said, the number of different classes that they've looked to attack and looked to develop products for. And I think in addition to the new entrants, which again comes with a different sort of level of complications, because again you have new carriers that have to build up a knowledge base. You also have the competition from those carriers again that have some knowledge and are looking to expand it. And I think those two, the confluence of those two, I think have created a very, very overall competitive marketplace.
What challenges are there to new entrants in the marketplace?
New entrants have to first build up their knowledge base, and then they have to find ways as they're seeking to compete to combat the knowledge base and the experience of those other carriers that are already in the marketplace. So in order to make a successful push, one of the things that the new entrants really need to do is pair with insurance intermediaries, agents, and brokers that have access to the type of business that they've identified as what they would like to write on going forward in terms of their strategy from an inland marine standpoint. The heightened level of competition ultimately can actually help erode some of the profit margin that attracted them to the marketplace in the first place, right? So they'll kind of have to deal with that.
Is there any downside for insurers associated with that kind of growth the market is seeing?
Well, I think definitely for the established carriers, established marine underwriters, obviously new entrants coming in intensifies competition. So for those carriers that turn or choose to kind of hold their ground when they're faced with insureds being offered coverage that's at much lower rates than they might determine that are appropriate for that risk, or that insurers that are given more liberal coverages and that they're unwilling to give, they may have to deal with the fact that they may have to lose some business, to help fight off those new entrants and the additional competition until such time that maybe the results for those new entrants aren't as favorable and they begin holding the line a little more, adjusting their underwriting to not be maybe as aggressive. And the reality is that for those established inland marine underwriters, there's no guarantee that they're going to get back the accounts that they might have lost during those periods of intense competition. So that's one thing that they definitely have to deal with.
So what does AM Best expect for this line of business in the near to midterm?
Well, I think what we looked at, and we've talked about in different spectrums, innovation. I think we see marine underwriters maybe partnering with insurtech companies and helping, using new technology to help them create different risk, create different risk profiles, different pricing structures to approach their business even more efficiently and more effectively. And we also see improvements in technology allowing inland marine underwriters to maybe write those sort of one-off inland marine coverages like trip transit coverage, for example, that from an expense standpoint may not necessarily pass the cost-benefit test, but because of the increases in technology and the enhancements in technology, I think some of those lines of business, some of those one-offs may actually become more attractive, and companies will be able to approach them with a different degree of expense savings, and then be able to offer insurance solutions for those types of risks. So we can kind of see that those are kind of improvements and enhancements on a going forward basis, kind of in tune with our overall thought that innovation in the overall marketplace is going to play a bigger part as we move forward.
David, thank you for speaking with us today.
My pleasure, Meg.
To view a full copy of the report, visit ambest.com. For AM Best TV, I'm Meg Green.